Welcome to the Strategy of the Week presentation for November 11th, 2011. My name is Todd Shaffer, Manager of Research for VectorVest, and I'll be conducting your strategy presentation this evening. Tonight's presentation is titled Shaffer's Solution: How to Prevail in a Troubled Market, where we will demonstrate the key is to go with the flow. In last week's strategy presentation, Instructor Ray Clark reviewed the performance of our triathlon contest winners in the most recent market period. He identified their obstacle course and ours, the market action, from May 31st of 2011 to October 31st, 2011. Let's take a look at a market timing graph. We'll open up VectorVest 7 and then I'll click the Graph tab. And here I have a market timing graph. This is showing only the price of the VectorVest composite. I'm going to add to this graph a technical indicator called average true range. We'll put that on as our subgraph. Now, to quickly review, the triathlon competition asked contestants to optimize a trading plan using our backtester tool for a time period between March 31st, 2010 and March 31st, 2011. So the first thing I want to do is set up my graph to represent those dates. This is the time frame they used in their backtest. Their resulting trading plans would then be analyzed moving forward in real time with our Derby and our Automated Portfolio Manager tools. Now, in just reviewing this time period, as Ray pointed out last week, we began this time period with some volatility early on, but on balance it had a strong upward bias. If I drew a line from my beginning price to my ending price, I have an upward bias in the price action and a relatively smooth price line for the last 6 months out of that 7-month period. Well, the trouble for our contestants began when the market action turned decidedly bearish for the real-time testing period of May 31st through October 31st of 2011. And I'm going to extend the graph to include then the data all the way to current. And we can see the market peaked here on the 2nd of May, just prior to our test period. And obviously, if I drew a freehand line again, we're decidedly in a downward price trend from that point forward. The other thing I would point out is by studying our average true range, the average true range technical indicator is looking at the daily range in price of the VectorVest composite price over the past 14 days. So we can see in these periods of volatility how the average true range really spikes up. And of course, compare this time frame, which ended somewhere in here, where we have falling volatility, versus this period moving forward, where we had rising volatility. And so bottom line, we need to understand the market conditions during our backtesting period, the period we're analyzing, and also identify the current conditions to make sure that they're consistent. So the secret then is to go with the flow. We need to change our approach as the market dictates. So changing the time period of our graph to the time period of our test, which was May 31st, 2011 to October 31st, 2011. This begs the question, what would have worked in this time frame, since we know the triathlon contestants' searches didn't? And to this question, I have a twofold answer. Whenever you're in doubt, the first place you can always go is to the views. If I go up to the VectorVest views, every day in our timing section, we do a market update and a strategy review, what's going on in the derbies. We also have our model portfolios, where based on your investing objectives, you might want to parallel the trading going on in some of these portfolios. To see the results of these portfolios, we have to go to VectorVest 6. So very quickly, let's jump over to VectorVest 6 and let you show you how these performed in this same time frame. Here in VectorVest 6, I'm going to go up to Main Navigational Toolbar, and I'll click on Portfolios. Here in the Portfolio Manager, we have two portfolio groups. The Model Portfolio Group, if I click on the little plus symbol, these are all the portfolios we've run since 2005, our current ones. Chairman's Choice, it's currently up 22%. And here's the equity curve. There's our current status, 22%. And about the middle of the graph forward, this is our performance since that May time frame. We also have the high income stocks portfolio up 8.5%. So here's our performance in this one moving forward from May. The riding the wave portfolio up 41.25%. And finally, the Yellow Brick Road portfolio, up 37.11%. And so the VectorVest views can be a great tool in helping you get direction for any market condition. My second answer to the question involves a lot more work, but I find it beneficial to conduct a study of the time frame to find out what did or didn't work so that I might understand future similar conditions. And so often when I'm doing these studies, my first stop is the simulator. The simulator runs in the VectorVest 6 environment, but it's still very helpful in terms of doing the heavy lifting of running a lot of analysis at the same time very quickly and easily from the user standpoint. The first question I wanted to answer with the simulator was, what strategies in the VectorVest system actually worked or made money during that time frame from May 31st to October 31st? And so I created a simulation. If I click on the little plus symbol, the first thing I created was a go with the flow simulation for the bullish signals and a go with the flow for the bearish signals. Within each of those, then, I created a simulation for each of our 4 major timing signals. So, for instance, the confirmed call timing, I created this simulation, which is essentially just a back test. I said using the confirmed dates between May 31st and October 31st, when I have a confirmed up situation, I want to go long. We'll close any portfolio positions that are open. I'm going to use the search top VST vector stocks. I'm going to use its default sort with no stops. I'm going to buy 10 portfolio positions, not buying more than 5% of outstanding shares of a company or more than half of their average volume. And so this will tell me then, buying and selling stocks from the top VST vector stocks search on the confirmed up and down dates, what would my performance be for this time frame? I then did the same thing for the DEW timing signal, the primary wave timing signal, and a combination of the primary wave and DEW timing signals. My second step was to do the same thing then with the short side of the time frame. So with our bearish searches, I created a bearish search for each timing system. So far, so good. The next step, of course, though, is to run all of the Derby-ready strategies against each of these 4 timing lists for both the bearish and the bullish searches. Well, we know that there are over 180 searches in the Derby, so that's a lot of searches to go in and run a single backtest and replace the strategy every time. Well, of course, the variator makes that easy. So I created a variator for the searches, and I have a variator here called Derby Ready Searches. In the variator, then, are all of the searches that are included in the Derby tool in VectorVest 7, with the exception of some of the Pro Trader searches. And so I ran this list of searches against all of my Go with the Flow bearish searches and against all of my Go with the Flow bullish searches. And what this does for me is that one at a time, it'll rotate one by one each of those searches into the purchase search slot and rerun the test for me. So let's look at some of the results. And we'll start with the bullish searches. We're on the confirmed call timing. If we look at the runs, I'm sorting my results now by Kalmar ratio. Kalmar ratio looks at the maximum drawdown relative to the compounded rate of return. And it kind of is showing you how much gain for how much pain. And I use this as my default sort because I may get a very nice return. But here I had a 12% return, but I had an 11%, almost a 12% drawdown relative to VST Mighty Mites, which had a 22.5% gain and only a 4.67% drawdown. But before I go picking the best strategy, let's first of all see which of these timers was most effective. So my best performer here, VST Mighty Mites, made 22.5%. If I go to the DEW timing list, I only had 4 strategies that actually even made money. Aggressive was the best at 8%. The primary wave, a couple more, but obviously a lot more winners with the confirmed calls than with the primary wave or the DEW. And finally, a combination of the primary wave and DEW. Again, only 2 positive runs, rising VST stocks and aggressive. Clearly, the winner here is the confirmed call. A lot more strategies that made money. Now, the other thing I want to do is I want to drill in a little bit, clicking on the glasses. This is the equity curve, and of course, we were only active in this portfolio for 2 short stretches because remember, this time frame was mostly a downward trending time frame. And the confirmed up calls, I only had 2 of them, and they were relatively short time periods. Still, I like to see how much volatility there was in those moves. I also like to take a look at the log to find out what kind of stocks I was buying. Was I buying a bunch of 50-cent low-dollar stocks? Now, of course, VST Mighty Mites looks for low-dollar stocks that have been beaten up on price but have good fundamentals. Now let's take a look at our shorting strategies. Come up here now to our Go with the Flow bearish searches. And let's open up each of these runs. Here's the confirmed call. Our best performer, Show Me the Money short, gained 44.97% with a max drawdown of 7.44%. So very nice performance. Let's look at the DW signal. Best performance at 20%, and again, fewer winners. Primary wave, lots of nice winners here. I have a 40% gain. Show Me the Money short again. And if I look at a combination of primary wave and DEW, again, fewer winners, but my best performer up here at 19%. I do see Show Me the Money short again with a 32% gain, although it suffered an 11% drawdown on this time frame. So my first observation, kind of an interesting one, is that for both the bear and the bull runs, the steady hand navigated this rough patch most effectively. Those confirmed calls. If we come back up and look at our results, they Show Me the Money short. Our next best performer had a 37%, so 7% less performance. We picked up 1% of drawdown, but I can also scroll over a little bit. I have percentage winners, and I had 10% better winners, 85% winners on Show Me the Money short. Let's take a look at its detail. Here's our equity curve. Of course, the flat lines then are the confirmed up calls where we were in cash. The portfolio itself exhibited a lot more volatility in this time frame, but overall garnered us that 44.97% gain. Let's take a look at the log. Again, I'm shorting most stocks well over $10, which is right where I want to be. So to recap, using those confirmed calls, I had a lot of strategies that actually performed pretty well in that time frame. Most of them with those names that you'll recognize. Looking at the long side, again, a lot of strategies that made money during those confirmed up calls. Now, because our contest was run in VectorVest 7, I'm going to pull this information forward into VectorVest 7. I'm going to optimize my performance in VectorVest 7. And we're going to open up our backtest tool. We're going to backtest an idea. Now, this analysis will be a little different from what you're used to in that I have 2 situations that I have to maximize or optimize. Both the long side for the confirmed up calls and the confirmed down calls. And because the majority of our time will be spent on the downside, on the bearish side of the market, I'm going to optimize that side first. So let's step through this. As for our account settings, I'll leave all of our defaults. Just confirm that you have $100,000, $9.95 per trade, and we're going to be executing on the next day's open. For market timing, we'll be using our confirmed calls. This functionality in the backtester is called Auto Tester, which allows us to automatically pull up these timing signals. If you don't have the Auto Tester module, it is available on a trial basis. If you don't have it, you'd simply have to manually advance the backtest to each timing signal. Using our confirmed calls then, when we have a confirmed up call, these are the rules that will be in place. First of all, we decided from our simulation runs that the strategy we wanted to use for the upside was VST Mighty Mites. That's in the Strategies bottom fishing folder. And I simply click on VST Mighty Mites. And while we can't see the criteria here, we do have a description box that tells us that Mighty Mites finds low price stocks with good fundamentals that have been beaten down. It's a good search for the beginning of an up market. The sort will bring stocks with a low relative timing, but a relatively high VST and GPE to the top of the list. That's that fundamental strength we spoke about. Next, we come to our stop criteria tab. And while there's none there now, let's put a rec equals sell as just a default so we can see what we do on a performance basis. And then finally, for the more settings, we will automatically replace 10 positions. We'll open all 10 at the same time. We'll close any positions when we get this signal. We're going to invest the average portfolio value with odd lots. We will limit repurchases so I don't repurchase anything that I currently own. Don't buy a stock if it violates the stop criteria at purchase. and the maximum number of stocks, percentage of stocks average volume is 10%. On the downside now, we want to sell short, and we decided our strategy was going to be, in the strategy short section, show me the money short. Now for stop criteria, I have 6 kind of go-to stop criteria combinations that I use, and I'll share them with you. First, I usually run rec equals sell, or in this case, rec is not a sell. Then I run gain-loss combinations, a 50 gain 20 loss, a 30 gain 10 loss, a 20 gain 10 loss, and then some trailing stops, a trailing 20 and a trailing 10. So those 6 are kind of my out of the box, and I'll go ahead and run them for this demonstration. But of course, there's a whole world open to you that you can use to improve on my performance. And of course, you can use whatever strategies you want to use to try to maximize that performance, including strategies that you craft. So this first run, we'll use recommendation does not equal sell. That'll be our first pass. For more settings, again, we'll use our defaults, 10 positions automatically replaced, close on entry, average value, odd lots, limit repurchases, don't buy if it violates the stop criteria, and no more than 10% of the volume. Our test period now will be set from May 31st to October 31st of 2011, and we'll give it a name. Flow short. That way I know I'm modifying the short side of the strategy. And this was going to be recommendation is not a sell. And I come to the bottom and I click finish and run. Automatically now we're executing our trades here on the automation window. Our equity curve is building as we move through in time. And we can see our synopsis line at the top shows us how we're performing. The arrows on the graph below indicate our confirmed calls. And through the magic of time-lapse photography, now we have completed our first run where we had a start date of May 31st. We ended on October 31st. We have a total value of $120,616. 39% winners, we gained 20.5%. That annualizes to 49%. Our compounded rate of return is 56.5%. We had a drawdown of 15%. And so we're certainly happy, but we could be happier. So let's see if we can improve that performance. To do that, this work process is very easy. I simply copy that back test. All of this information is going to stay the same, except I need to change the stop criteria from recommendation equals sell to my first percentage gain loss, which will be a 50% gain and a 20% loss. I come down to the bottom and I change the name so that I can keep track of my results. And this would be a 50 gain, 20 loss. And I click finish and run. It's created now my second test. In my naming convention, I can understand what I changed. Because the long side is staying the same, then I'm staying consistent. And so we can see we improved our performance. Went from 20% to 48% with a 12.5% drawdown. Well, through the magic of the pause button, I'll complete the other 4 tests that are in my base set. So stand by. Okay, so I've finished my pass now on the short side, and my winning stop methodology is a trailing 10% stop. We ended up with a 50.99% gain, which annualizes to 121% with a max drawdown of 22.67%. Quite a steep drawdown. That leads me first right to the equity curve. Where is this drawdown? And I can see, if I move this date line out of the way, this is that 22% drawdown. So let's see if I can affect that. I've got a confirmed up call here. Maybe I can clean that up a little bit with that call. If I can't, I might prefer to come down to the 50-20, where I had a 48.5% gain but only suffered half of the drawdown. Drawdowns over 20% are getting a little steep for my temperament. The second thing I would note is typically in a bull economy and the bear runs are short and rather volatile. And so you usually make more money by taking your profits quickly. This 2010 would usually work in that kind of environment. Interesting to note because the bear runs, now this is more like a bear market where the bear trend is much longer than the bull trend. We flipped that around where I'm getting better performance by letting my winners run instead of keeping the tight leash on them. So I'd be interested to note if on these bull runs, if it flips around, am I better off taking my profits early with, say, a 2010 on the bull runs? We've maximized the bear side now, so I'm going to take these tests, and just for clarity, I'm going to erase them. And now I'm going to try to maximize the bull side of this trading plan. And so I'm also going to change my naming convention. So let's go into the edit button. And by default, we're already running the first of one of my 6 stops here as a rec equals sell. So I don't really need to rerun this. I just need to rename it. And I'm going to rename this solution, which would be 10 trail -rec equals sell, and click finish. So solution means that this is both sides now finished. So I'm sticking with the 10 trail on the short side now through all of these tests. And I'm going to change now the long side. And you can set up your own conventions. I put this, because this is the variable I'm changing, I put it at the end to make it a little easier to change. But basically I want to copy that run. And now we're changing the long side. So we'll go to that side, and I'm going to change my stop criteria to percentage gain loss. And the first thing I'll run will be a 50 gain and a 20 loss. Let's come down and change our name to 5020, and we'll click finish and run. And of course the short side performance should stay the same. We'll see a difference now in the long side performance. All right, and here's our result, and we can see that we did improve our gain. We went up from 50 up to 64%. Let's collapse this column a little bit so we can see our drawdown. We improved our drawdown a little bit from 22 to 21.5%. Well, let's just make a copy of this one, and we'll finish up the run. And I'll hit pause now and complete the runs for us. Okay, here are our results sorted by gain. And we can see that we maximized our performance by using a 10% trailing stop on the bullish leg. Interesting to note, remember we were talking before about whether or not the shorter stops would work on this side. The 2010 performed better than the 3010, which performed better than the 5020. So we did see an inversion here, interestingly enough. And these are the kinds of things that you kind of put on your tool belt and use as the market conditions change. But as I look at the results here for this test, we had an overall gain of 71.06%, which is obviously fantastic. Who wouldn't like to make 169% annualized rate of return? But here's a problem for me. I'm still at that 21.5% max drawdown. Through all 5 of these runs, I didn't really make much of an impact on that drawdown. That's a little steeper than I would like to trade. Now remember, my second choice search on the short side used a 50-20 gain for the short side. So I know the second place performer on the short side was that 50-20 gain, which only had 11% or so drawdown. So I'm going to do one last thing here. I'm going to copy that again. I'm going to change my short side stop to that 50 gain, 20 loss, and see if I can't improve on that drawdown. And now that I've optimized the short side and the long side, I should be getting pretty close. Well, how did we do? We ranked 3rd place overall in terms of raw gain, but look what happened to my max drawdown, 11.5%. I cut my drawdown in half, but I only lost 3 points of gain, 3 percentage points of gain in the overall performance of the portfolio. This is the way I'm going to go, because I still have an attractive gain and a much more tolerable drawdown. Let's take a look at the analysis report. We can see we made a total gain of 68.09%, which annualized at 162.5% with our drawdown of 11.4%. We had 61% winning trades. If we scroll down a little bit, we have our diversification by position size per symbol, and those look relatively balanced, and by industry, again, relatively balanced. If those get terribly out of whack, then I get concerned that I'm getting results that were skewed because we got too heavily into one sector or industry. And these were the settings for our back test. And so there you have it, my solution on how to prevail in a troubled market. Do some empirical testing to identify what is working, and that will help you understand how markets work and how you can take advantage of them next time that situation comes around. Of course, I was only able to scratch the surface with you here, showing you that basic process. There are still a lot of capabilities within the VectorVest tools that you can use to be more successful in the markets. Well, that concludes our strategy presentation for this evening. I thank you for watching, and of course, if you have any questions, please call us in the product support at the displayed number. Have a great weekend, and we look forward to seeing you again on Monday with our recap of the market and our daily color guard report. Until then, have a great weekend.